Hi, this is Alvin from Dr. Wealth. US is going to the polls. It is midterm election now, but we are not going to talk about politics in this video. We're going to talk about how midterm elections can have an impact to the stock market. I have interesting stats to share with you, and it is something that is anomaly, right? Because usually political events should not have a big impact to the markets, but this midterm election does have a big influence. And I'm basing it on a study that was done by US Bank where they looked through the past 15 midterm elections over a span of 60 years and see whether there's indeed some correlation or some statistics that's significant enough for us to look at, and the answer is of course yes. Let's first look at the performance of the S&P 500 a year before a midterm election. So 12 months before, right, you will see that the midterm year average will give you a negative return of -1%. And while if the year doesn't have a midterm election, it will give you an average of 11.2%. So this is a very big difference. It cannot be just attributed to luck or coincidence. I would think that this sort of like such a big variance in the results will have some linkage to this political event. Okay, and of course, more importantly, we want to see what happens after the midterm election. This is 3 months after a midterm election, and the time period that they were using to compare was 1st November, which is usually the month where the midterm election starts, and then until 31st January the following year, which is a span of 3 months. And they compare a midterm year, you will get a 7.3% return in these 3 months. While if it's a non-midterm year, this period you'll get just a 2.9%. Again, you can see that there is a difference, and it's sizable enough because it's doubling of their returns, right, in just a span of 3 months. So you can also say that prior to midterms, the results tend to be negative, right, in the stock market, but after midterm, it tends to be more positive. And of course, the average can be misleading. We want to see year by year what is the chances of us getting a positive return. So this is the span of 15 elections, right, over the span of 60 years. And you can see that 4 out of 15 elections gave a negative 3-month return after the midterms. Okay, just 4 of them, which is about 27%. And that means that the other 73%, you have a chance of getting a positive return 3 months after the midterm election. So again, this is a very high odds that we are looking at. And not only that, if we stretch it to 6 months and 12 months after the election, the results are even better. You can see that if it's a midterm year, over a 6 months period after the midterms, you will get a 15.1% versus 4.2% over a non-midterm year. And if you stretch it to 12 months, you will get 16.3% for a midterm and then 6.4% for a non-midterm. So there is again a very big performance difference, right? If it's looking at 6 months, it's a 3 times difference, and looking at the 12 months is more than 2 times difference. So this outperformance over that 3 month, 6 month, 12-month periods is not fluke again. Okay, so there is something going on about this midterm election with the stock market. And this is to show you another statistics, right? How many times do we get positive return? How many times do we get negative returns over the past 15 midterm election? And you can see whether is it 6 months or 12 months. In the last 15 midterm election, okay, there were no negative return for S&P 500. This is a very, very strong and impeccable track record for midterm election. And the chances of us seeing a positive return 6 months down the road, 12 months down the road from here is actually very high, right, if this statistic is going to hold. And of course, you must be wondering, why is this happening? Why is the stock market so bullish after the midterm election? So there were some reasons throwing around, and these are 2 of them. So the first is that the US Bank analyst who did this report actually said that, oh, it is just coincidence. Political impact or political factor is not as big as economic factors. They were saying that, oh, because on certain years the economy was bad, 12 months before the election, that's why the stock market were performing a lot worse than what they were in the more recent midterm elections, right? So there were some studies done like this, right? But I'll give you my view later, okay, whether I agree with this. And the second is about government spending increase to effect new policies, right? Because after the new Congress is being formed up, the legislative body will start to enact new laws, and then they will need to spend to make the policy work in the real life, right? So that could benefit some of the companies out there, seeing higher revenue, seeing higher profits, okay? And then probably that's why the share price went up. So these are two of the more common reasons that were given. And here's my take, okay? On the first point, right, on US banks saying that, oh, it's more economic factor rather than political factor. I don't buy that, because if you remember a previous video I did about recession, okay, recession, it is usually the GDP growth is negative, right? And people expect the stock market to underperform as well, but that's not true, okay? Because half of the time during recession the market goes up, and the other half of the time the market goes down. So there is no correlation. In fact, if you do a GDP growth with stocks, correlation is negative 0.05. That is almost zero. So I don't buy the US banks comment about, oh, it is more economic rather than political reason that caused the midterm rally. Okay. And then the next one is on the note of like increased spending after the new Congress was formed, right? And the thing is that government spending, yes, can increase after the midterm, but it may not be uniform, because it will not benefit all the companies out there. You probably benefit one or two sectors, specific companies, but somehow the entire index, which is very broad, multi-sector, covers everything, goes up together. Okay, and even during inflationary period, why I want to add this in is because some of the commentary was saying that, oh, this time the midterm election rally is not going to happen because inflation is high, government will not spend so much money to stimulate the economy. But if we take a look in the 70s, there were hyperinflation, but yet the midterm election post S&P 500 rally was still there, right? In 1970, it went up 24% after 6 months. In 1974, it went up 18% after 6 months. In 1978, it went up 9.2% after 6 months. So again, this, I think, it cannot really be explained with any of the reasons that were given so far, right? So if you ask me what is really going on with this anomaly, I have no answer for you. Okay, nobody can really pinpoint what caused this midterm rally. Maybe there's even a conspiracy theory, because some of the insiders, the new guys come in, they want to make money, they push the stock market in a certain way. Okay, so that is another reason that was given, right? But no, there's no way that anyone can prove or disprove anything, even at this point in time. So what we all know is that the chances or the probability of you getting a midterm S&P 500 or US market rally is very high, right? Based on the track record that we have seen so far. So with that, I think if you are holding a lot of cash, maybe don't need to wait for the bottom, because we really don't know where the bottom is. There is some statistical advantages at this point in time, that if you have been considering whether to go in or not, maybe these stats will help you. All right. What do you think? Share with me. Okay, do you agree with this midterm rally? What do you think is the reasons that caused this midterm rally to happen for so consecutively in the past 15 midterm elections? Okay, so I hope you like this video. Give me a thumbs up and subscribe to this channel, and we'll do more videos like this. All right, thank you for watching. Goodbye.